Hello there. Welcome to tradevest.eu. Imagine waking up to your crypto portfolio down 20% overnight, not because of a hack or scandal, but because of a single tweet from the White House. That's exactly what happened last week when President Trump's surprise announcement of 100% tariffs on Chinese imports sent shockwaves through global markets, triggering a massive crypto crash on October 11th. Billions in liquidations, altcoins in freefall, and fear gripping the streets of crypto Twitter. Welcome to this deep dive where we unpack why the entire market dipped and zoom in on SEI, the high-speed Layer 1 blockchain built for trading that's quietly positioning itself as a survivor. Today we'll explore the bull case, explosive ecosystem growth and institutional bets that could rocket SEI to 50+. And the bear case, if macro storms worsen, it could test 20-cent lows. Stick around. By the end, you'll have a simple 4-step framework to analyze any coin like a pro. Let's dive in. No cryptocurrency floats in a vacuum. They're all tied to the bigger economic tides. Last week's dip? It wasn't just crypto drama, it was macro mayhem amplified. Start with monetary policy. Think of central banks like the Federal Reserve as the gravity for asset prices. When they hike interest rates to fight inflation, money gets expensive. Investors pull back from risky bets like crypto and flock to safe bonds. Right now, Fed jitters are real, with whispers of no rate cuts until 2026, squeezing liquidity and fueling that tariff-triggered sell-off. Then there's economic indicators like the Consumer Price Index, or CPI, basically how fast prices for everyday stuff are rising. High inflation, like the 3.2% we're seeing now, drives folks towards scarce assets like Bitcoin as a hedge. But when tariffs hit, supply chains choke, inflation spikes further, and panic selling kicks in, exactly what tanked the market cap to $4.26 trillion last week. The lesson? Always check the macro weather before trading. Crypto doesn't crash alone, it rides the global wave. From the big picture, let's zoom into SEI, the SEI network's native token powering a blazing fast Layer 1 blockchain optimized for DeFi trading. Why SEI? In a dip like this, fundamentals separate the survivors from the smoke. First, on-chain metrics. This is the project's public heartbeat, data straight from the blockchain showing if it's alive and kicking. On-chain just means the transparent ledger everyone can verify. For SEI, active addresses exploded 350% in Q3 alone, with daily transactions up 45% and new users tripling. That's real adoption. People aren't just hodling, they're using it for trades, lending, and gaming. Transaction volume? Over $495 million in the last 24 hours, proving the network's pulse is strong even in red markets. Ask yourself, are people actually building and trading here? For SEI, the answer is a resounding yes. Next, tokenomics, the economic engine. SEI has a fixed total supply of 10 billion tokens, with about 6.1 billion circulating now. No endless inflation to dilute your bag. Its utility? As the gas for transactions, staking rewards, and governance on SEI, a chain clocking 400 millisecond finality for ultra-fast trades. Plus, 48% of supply is locked in an ecosystem reserve for long-term growth, aligning incentives for builders. Finally, development activity. Hop on GitHub and you'll see SEI protocols repos buzzing. Recent proposals like an EVM-only architecture show a team laser-focused on scaling. Consistent commits mean a dedicated crew, not vaporware. SEI isn't hype. It's engineered for the long haul.
Now, let's read the market's tea leaves because price doesn't lie, but context does. Keep technical analysis simple. Support levels are like price floors where buyers step in. Resistance is the ceiling sellers defend. For SEI, it's holding key support at $0.21, $0. 22 after dipping to $0.10 for on the tariff news, a 21% slide in one day. Break below $0. 20 and it could test $0.15. Hold and $0.28 resistance beckons. One tool to watch, the Relative Strength Index, or RSI. It measures if a coin's overbought, too hot, sell, or oversold, too cold, buy. CA's at 28, neutral but leaning bearish in this downtrend, hinting at a potential bounce if volume picks up.
Volume tells the truth. High volume moves, like SEI's 120-hour daily surge pre-dip, stick. Low volume fades are noise. And correlation? SEI dances close to Bitcoin's tune. When BTC slips on macro fear, so does it. But with size trading focus, it could decouple upward if DeFi rebounds. Bottom line, watch volume for conviction and levels for the next move. Time to tie it all together. Macro headwinds, rock-solid fundamentals, technical floors, and raw market mood. Sentiments in the dumps. The crypto fear and greed index hit 27, straight fear territory, with traders panic selling amid $19 billion in liquidations. On X, it's a mix. Bullish on size growth, but red portfolios dominate. Building the thesis, blend macro relief, SEI's user boom, support holds, and fear turning greed. 3 scenarios for this cycle. Bull case. Institutional wins like BlackRock funds Lev on Psy and Coinbase upgrades ignite, plus EVM upgrades push to 50 plus on 2x TVL growth. Needs, rate cuts, and DeFi rally. Bear case. Tariffs drag inflation higher, Fed stays hawkish, 18 token unlock adds pressure, testing 20 if BTC breaks 100K support. Biggest risk, prolonged liquidity crunch. Base case, most likely, stabilization at 25 cents as fear fades, with 20 to 30% upside on ecosystem momentum. SEI weathers the storm better than most. There you have it. If this breakdown on the dip and SEI sparked something, hit subscribe for more. We drop these deep dives weekly. Drop in the comments. Which coin should we tackle next? BTC's next leg or an under-the-radar gem? Disclaimer, please remember this is not financial advice. This video is for educational purposes only. Always do your own research before investing.